As you grow your business, it gets harder to stay at the cutting edge. When you first start a business, you have a blank canvas. You can choose all the latest technologies and best practices. As you add your first few employees, you can keep pace by adopting new tools yourself. But as you grow bigger, you start to rely on your team to innovate, who won't do this consistently, and it's hard to keep pace across the whole organization. Any inconsistencies will make your business more complex and more inefficient. So, how can a growing business modernize and keep up with industry demands? Well, today we're diving into these issues with my guest, Mark Lee. Mark is a highly respected speaker, mentor, and influencer who specializes in transforming businesses through innovative technology, particularly in the accounting and bookkeeping industry. With over 3 decades of experience, he's been recognized as one of the top 100 global business influencers by Sage and chairs the UK's largest network of specialist tax advisors. Mark was recently awarded the Outstanding Contribution Award at Accountex 2024 and is a fellow of the Professional Speaking Association. Now, his extensive knowledge and practical strategies have helped many firms to modernize their practices and stay competitive. So in this episode, we'll dive into the biggest future demands for accountancy and bookkeeping businesses, explore practical steps for modernizing businesses that are stuck in the past, and also look in detail at how AI and automation technology can revolutionize day-to-day operations. Welcome to De-Stress Your Business, the podcast where we show you how to get incredible results in your business without constant stress. I'm Alexis Kingsbury, a serial entrepreneur and founder at AirManual, and I'm joined by Mark Lee. Good morning, Mark.
Good morning to you too, Alexis. Thank you for having me.
Well, it's an absolute pleasure. And I want to start with your journey in the accountancy profession and what inspired you to particularly to focus on modernizing businesses.
My career took a rather unconventional path, I suppose you might say. I started life as a children's party entertainer, then became a magician, and then an accountant and a tax advisor. Did that for 25 years. During that time, I was fortunate to be headhunted twice, including by BDO to lead their professional practices team. So that's when I started advising professional firms generally. I also experienced redundancy twice. And the second time I experienced redundancy, I sat back and thought, actually, I became an accountant and then a tax advisor, probably because I was good at communicating complex concepts more effectively than many of my colleagues, not because I had a deep passion for accountancy or tax. And I decided in 2006 that I'd focus the remainder of my career on those aspects of what I'd been doing that I enjoyed the most, which were speaking, writing, and mentoring. And the other relevant fact, I suppose, in terms of your question there, Alexis, is back in 1995, it's horrendous to think how long ago that was. I conceived, launched, developed, and I don't think you know this, the first tax planning software for accountants. It was called Cyber. It was launched at the same time as I co-wrote a book with a couple of colleagues called The Essential Guide to Self-Assessment. Now, this was what was then the new self-assessment tax system. And as part of that, we moved from the old prior year basis of assessment, PYB, to the new current year basis, CYB, hence the name CyberTax.
No.
I did everything except write the code. But the reason for developing the software, which I was pleased that my colleagues and partners at the accountancy firm I was with supported, was that I recognized, having created a load of examples in the book, that accountants would need to be able to run examples for their clients, much as they're having to do now, because there's another similar sort of change happening now. Not quite as extensive. And I recognized that they would all be struggling to code their spreadsheets to take into account all of the complex rules. And with CyberTax, we did that for them. And in some respects, it was a great success. I could talk about it if you like, but it was relevant, I think, at least to mention it.
Nice. And so I can see that, your journey, as you say, perhaps an unorthodox one. Most people start as an accountant, trainee accountant, and go up through that industry. Children's entertainer and magician is less common, but I'm glad that we've got some representation from that
Well,
industry in it.
some of your listeners may have come across James Ashford, who founded Go Proposal.
Yeah.
James also started life as a children's party entertainer.
Oh, did he really? I didn't know that. That's fascinating. Oh, cool.
Or
Well,
it may have been close up,
okay.
Magic, but
Oh,
we've had that conversation.
well, perhaps this is more of a recognised career path than perhaps we realised. So, as you mentioned, you went then more into speaking, writing, and doing all that kind of stuff, and particularly in this industry. I've seen you speak at accounting events and so on. But I'd love for you to share, perhaps, what do you see as the biggest future demands for accountancy and bookkeeping businesses?
I think there's a lot of pressure to embrace AI, which is a tool. And if we just go back to the cyber tax example for a moment, I recognized that accountants would struggle to code spreadsheets to cover everything they needed them to cover.
Yeah.
And AI does something similar to what spreadsheets did 30, 40 years ago when they were first introduced. We used to struggle to get spreadsheets to be correct. We didn't understand best practice. And in fact, to a large extent, we outsourced need to code the spreadsheets by buying in software that had been created and checked to do all the things we needed it to do, so that we didn't have to rely on in-house people updating, changing things, and risking if somebody leaves, well, can you still rely on the spreadsheet? Will it still be up to date? We never blamed spreadsheets for making mistakes. We never blamed spreadsheets for being unreliable, because we knew it wasn't the spreadsheet, it wasn't the technology. It was our inability to understand how to code it properly to minimize or reduce and avoid those mistakes. And I think one of the big challenges we currently face is first impressions of AI. At the time of recording, it's less than we've had ChatGPT and similar such large language models, generative AI, for less than 2 years. We are still just grappling with how to prompt AI to get what we want. But if we recognize it as a tool, and what will almost certainly happen is we will do the same as we did with spreadsheets. Rather than trying to do everything ourselves and taking the risks of not getting it quite right, we will buy into reliable software that has it built in, whether through co-pilots or other technology of which I'm not yet aware. But one of the big challenges for leaders is enthusing staff who are aware or think that AI makes mistakes, hallucinates, or is unreliable, when it's not the concept that has those problems. It's the way we're using it and the limitations that it currently has, but which it won't have in a year or 2 or 3 years' time. And it will revolutionize how we do everything.
Yes, indeed. And I think I like that as a useful lens to apply, where you're saying, as you say, with a spreadsheet, you wouldn't blame it in those ways, and yet often AI is kind of challenged in that way. So I think certainly AI is going to be absolutely game changing for every industry, and accounting and bookkeeping being a really interesting one. I know that as an industry, it's like in that, I think it's normally identified as being top 3 industries that is going to be disrupted by it, up there with the legal profession and so on. Are there other trends, other future demands that you see that outside of AI that are kind of changing the industry?
Well, yes, AI, as you say, is a disruptor to an extent, but I've done some research on a lot of the reports that AI will damage the accountancy profession or reduce the need for accountants. And in the main, and frankly, with due respect to Professor Richard Susskind, who wrote The Future of the Professions 15 years ago and anticipated a lot of what we're seeing now, he and most journalists and others who forecast the end of accountancy or dramatic reduction in the need for accountants actually don't seem to understand how the profession operates. There will be a reduction in the need for the junior administrative staff. There will be a change, as you might call it, a disruption in terms of the services that accountants deliver. But, and I think this is a huge, huge caveat that's so often overlooked, most accountants who studied professional exams and went on to be professionally qualified accountants, which of course, as you and many of your listeners will know, is not all accountants.
Yeah.
Anybody can call themselves an accountant with no professional qualifications whatsoever. But anybody who's done professional qualifications to become a member of the ICAEW or the Institute of Chartered Accountants in Scotland or any of the other bigger bodies did not study and qualify in order to spend their days collating information to prepare a set of accounts and to file a tax return. That is, however, what thousands do. And there's nothing wrong with it. I'm not denigrating it at all. It's a service that clients want. As all of that gets easier as a result of AI inspired software taking so much of the drudgery from that, accountants will be able to rise in terms of what they do for clients and the value they deliver to clients. And the challenge which relates to that is that many accountants haven't previously had to develop the key business skills in order to promote, price, or even pitch those wider services that clients would value if they knew they were available and if they knew how they would benefit from them. And I think that's the other sort of related change.
Yes, yeah, and I see that in many industries, but particularly professional services industries such as accounting and bookkeeping, where you've got this weird split of transactional work that often is, the thing that the client wants, and there is volume work but not high paid, versus how you make your profit is actually on advisory and the consulting and all these sorts of things at the top end. But for a lot of business owners is a harder place to start for a number of reasons. And in fact, it reminds me a bit about a previous interview that I did with Reza Huda, who you all know, and we talked about what it takes to make a profitable practice. And we've got an upcoming episode with Amanda C. Watts in which she talks about creating the advisor and so on. So I think, yeah, spot on. I can completely see how one of the challenges for those practice owners is even to work out how to, as you say, price and promote those kinds of services as being the offering. And certainly I'm also seeing, exactly as you said, it's not AI, automation, etc. It doesn't remove the industry. It doesn't even remove the need for those accountants. What it may change is the resourcing breakdown that you have. And I see a lot of people talking about how the junior staff, there'll be less need for the junior staff. I'm less sure of that. I feel like actually what it'll do is change what we need to use junior staff for. And I think it's one of the reasons why, what we do with AirManual, like a lot of the clients that we're working with, it's about how we're documenting and delegating the work that's done by the more senior staff so that those things that traditionally would have been done by accounting manager or whatever actually can be done by junior staff. And I suspect that'll happen as well. Like if I think of an accounting firm we've been working with recently, where one of the things that they were documenting and delegating was around how to manage the automations and the bots and the AI. And they were getting that captured so that they could pass that down so that that wasn't being done by their more senior staff. Now, and that's a classic example of roll the clock back 5-10 years ago. That wouldn't even be done by an accounting person. That would have been done by an IT, like head of IT. Yep. And so I think that's some of the ways that I'm seeing change. Given that in so many businesses, I think, we appreciate AI, automations, all these sorts of things are changing the industry. What would you say for businesses that are perhaps feeling a bit stuck in their ways, particularly, ones that have got sort of increasing their team sizes, perhaps to double digits or even beyond? It can be hard to then feel like you're going to make some of those shifts and keep up with it. What would you say is the kind of first important step that they should be taking towards that modernization and trying to keep up?
Well, I think I'll answer that, but I'd also then like just to go back to your observation, which I agree with, by the way, about the reduction in junior staff, and I explain why. But the answer to your question is the leaders, first of all, have to want to lead and for things to change. I'm not convinced that many leaders of accounting firms or businesses sit there thinking, we're stuck in our ways, we need to change. I think that push, in my experience, comes from people further down trying to persuade the leaders that they need to change, to move forwards, to have a future. Let's remember that most accounting firms are sharing the profits amongst the partners and the directors. The investment required to change, leave aside the cost of the software. I once worked for an accounting firm that was introducing the first CRM in the UK for an accounting firm. They were going to invest in what was then Siebel, Seibel, and it was going to be used by this major accounting firm I was with. I'm not talking out of school, it's so long ago, it's of no relevance. And there'd been a decision that we would deploy it, and I was on the partner validation program. I was enthusiastic, I was young, I knew, because of my cyber tax experience, I knew more about technology than any of the other partners. It wasn't much, but it was something. And we were investing £2 million in the change program. And unfortunately, I looked at it and went, this would be brilliant if it worked. But there were two fundamental problems with the way it's been introduced to us. The first one is it won't synchronize with our Palm pilots.
Right.
Now, Palm pilots preceded mobile phones. They were amazing. And the people who were pushing it said, no, it doesn't matter, Mark. Less than 10% of partners are using Palm pilots. And I went, when did you ask them? Last year. Well, I bet you it's 20% now. And next year it'll be 50%. Who knew that smartphones were coming? Yeah. But it couldn't synchronize with them because there weren't enough fields in the Palm Pilot diary entries compared to the information that was recorded in Siebel. So I could see that would be a problem. And the second problem was that I knew how partners thought. Yeah. The theory was you'd go online, you'd call up Siebel, you'd look at Alexis Kingsbury's record, and because the package that we were investing in was actually meant for telesales people, all of the information about Alexis Kingsbury wouldn't be on one screen, it would be spread over 12 screens. Yeah, for the different types of information. So I said, well, unfortunately, what will happen? Partners are not going to sit and look at their screens. Remember, this was over 20 years ago. Yeah. Screens were not quite as ubiquitous as they are now, or as thin and transportable. So what will happen? A partner will say, I'm going for lunch with Alexis Kingsbury, print off what we've got. And the secretary would print it off, and there'd be 12 pages of stuff, which the partner would look at in those days in a cab on the way to, and he'd come back and he'd have scribbled on it and would give it to the secretary to upload, which was not what it was in. Yeah. And I said, look, it's a brilliant concept, but that's what's going to happen. Unfortunately, I would love it to work. I'm very focused on helping move from plain vanilla Siebel to what we need it to be. But those are two fundamental flaws. My fear is it will end up becoming a glorified marketing database. I left a year into the program and I kept in touch with a few people and was told that within another year, it'd become a glorified marketing database. That was so long ago now. But the point being that those at the top, it's a very long answer to your question, but those at the top had this sort of big idea and they didn't engage the rest of us. And some of us in sort of not right. I was a partner, but I wasn't on the management team. We had a better understanding of what was needed in the practice than the partners who'd been sweet talked by some techies and marketing people, which was a real shame. Can I come back to your point about junior staff? Because I tend to agree that they won't all be swept away. But two examples. The first one is, if you go back 20 years, almost every partner had a secretary. There'd be secretaries for teams of people. Some accounting firms still have secretaries and admin staff, but they don't have secretaries in the way that we had. And contrary to what we might all have hoped and expected, partners have had to learn how to do their own typing or
Yeah.
dictation, which is a lot easier now with voice recognition than it ever was. My family used to tease me when I first went freelance. I was using something where I used to have to say, wake up, to wake up the software, go to sleep when somebody came in. And apparently all day long I was going, wake up, go to sleep, wake. I still remember it now. It was I forgot what it was called now. It was very famous. Again, when we moved from the prior year basis to the current year basis, the beginning of the self-assessment system, one of the great advantages of that switch was we would go from having loads of the revenue issue estimated assessments. We'd have to make appeals against them, postponement applications. Oh my God, I hate remembering this stuff from 30 odd years ago. But we knew we were getting rid of whole swathes of paperwork with the new system. We assumed, and a lot of people were projecting, we'd get rid of a whole swathe of junior staff that wouldn't be needed anymore. And in fact, you're absolutely right. We just found other work for them to do. And in some respects, work cascaded down. They were able to take on more responsibility earlier. The caveat to that I've heard is if you're not doing what we used to call the ticking and bashing of basic auditing and verifying data for financial purposes and tax returns, if you're not doing that, then how do you learn the basics? And if you're working remotely and partners are engaging with clients remotely, how do you develop the key business skills, which I've been banging on about for many years, in order to build those relationships with clients and deliver the advice that they need? Is everybody going to be making it up as they go along or learning from the same technology, but less learning alongside colleagues, unless accountants, and I think this will happen, take a leaf out of the management consultancy books and experiences where junior consultants tag along with the senior consultants. And I think it should always have been that way in the accountancy profession, but I think there will be greater pressure as we start to deliver more advisory services across a whole range of topics.
Yeah, agreed. And in fact, given that my part of my background was management consultancy, I can share that when you say they're the tag along, yes, there was an element of that. But I think sometimes people can assume that therefore that junior staff member wasn't giving value to the client, like it was, almost just shadowing. And my experience of it was the opposite. It was much more that you're introducing this junior person as doing that work, and they are going to interact with the staff and support workshops and do all those sorts of things. It's just that the more senior staff were the ones that were firming up these are the conclusions, this is what we're going to do next, and making sure that, and as it applies to accountancy, it'd be the equivalent of the junior is the one that's going to do the analysis of the data and have the conversations with various members of the organization and draw up the high level analysis and report. It's going to be the more senior people that are then reviewing it and making sure that this is in line with what we want to do. And I can imagine the juniors leveraging AI to help them write the reports and to identify the trends and all those sorts of things, which makes it even more useful that you've then got the senior kind of saying, well, okay, this doesn't align to the narrative that the business leaders are telling us about the business. Why is that? And challenging further and so on. So, yeah.
And junior people will, as a result of leveraging AI, will actually be able to generate higher quality, more incisive reports than they've historically been able to with limited experience.
Yes, yeah, indeed. And it's interesting because I remember back in my consulting days, the consultancies that were looking to hire people like me, you had the straight down the middle management consulting firms, but then you had the IT integrator type of consulting firms like Accenture, where it's like, yes, we're doing business consulting as part of IT projects, but then the other group was companies like Deloitte, who it's like, actually, we're accounting, but also and PwC as well, like doing the consulting. And so it's interesting that actually maybe the entire accounting industry is going to be following suit, where actually it's like more and more we're business advisors. In fact, it reminds me of back in 15 years ago when I was doing process transformation for finance teams. Big thing that we were doing was helping them essentially outsource the transactional finance stuff and instead be set up as finance business partners, these, commercially astute business people, financy people who are going to support the heads of functions and the rest of the business and help them make better financially based decisions, which, okay, of course, essentially it's like, and now that's what we're expecting from our accountants is actually, I don't just want to outsource the statutory stuff to the accountants. I'm expecting them to show up with better advice and all that kind of stuff. And
well, that's so crucial, Alexis. And again, when I talk about key business skills across a whole range of areas that accountants need to embrace, and it's partly because with the push and the move to advisory, and let's just be clear, I've been debunking the hype that compliance work is dying, you've got to move into advisory for over 15 years. Compliance work hasn't been dying. The perceived value of it is going to reduce faster than it has done previously, to the extent that there is more time for accountants to deliver valuable services to clients. But they're competing with business coaches and management consultants who have been giving business advisory work to businesses for years and have already developed the key business skills to promote, pitch, and price those services effectively in order to then be able to perform them. And they've got access to the same financial systems and data that's being generated by the client. And yes, I know we're still in a situation where some of those business coaches and consultants will say to the client, can you just get your accountant to give me this report, or whatever. And the accountant goes, what do you want that for? Oh, my business coach has asked for it. How much you paying your business coach? Oh my goodness me. If I'd known you had that sort of money to invest in advisory, I could be doing that for half the price, be very happy with what you're paying and delivering more value because I fundamentally understand the financial data. And accountants historically haven't had to promote their services in quite their compliance related services in quite the same way, because historically most people, when they're looking for an accountant, are looking for them to do one of three things. Primarily, they're looking for an accountant because there are legal obligations to prepare and file accounts and tax returns, and the business owner doesn't have the time, doesn't trust themselves, or is concerned about the risks of missing deadlines and suffering fines and penalties or whatever, so they outsource it to an accountant. Terrific. Majority of accountants get the majority of their work as a result of that. The other two possibilities is that there is a reason why they need to talk to an accountant, either to resolve historic tax problems or because of perceived future tax problems. And the third reason is financial related, either expansion or securing finance and advice related to that. All of those are external factors forcing people to seek an accountant out. They don't seek out an accountant generally for advice. That follows on after the relationship has been built. But of course, the business coaches and management consultants have been promoting and pitching advisory services and convincing and converting clients to invest in them for years. And accountants are going to be playing catch up the more they want to do that sort of work. They're in a better place to deliver a better service in most cases, but they don't yet, across the board, have the necessary skills to promote, pitch, and price them.
No, I think that's spot on. And I think it's interesting. It reminds me of earlier episode we did with Ian Morgan, who runs MBS Accountants, and where he was talking about how he saw bookkeeping and, and the sort of the more transactional tick box stuff as actually the queen bee role, which I believe is a term from Clockwork from Mike McAllowitz. So I think we had an episode 93. so it's all connecting up. But the interesting thing there is, as you say, like if you look too much to be just like, oh yeah, we're just going to do advisory, it's like actually you're starting with a significant disadvantage versus the others that are just in that space. The advantage that you have and have to use is, well, actually every business needs some element of bookkeeping-y, statutory, compliance-y support. And that's a really nice in to then, if you can do a good job of that and make that super efficient and make it so that the numbers are available and easy and so on, then you can do your high value, high profit stuff on top of that. And that's where your opportunity is, that combination versus fighting against coaches and consultants who don't have that connection. So that's valid.
In 2017, Intuit flew me out to San Jose for a QuickBooks Connect conference out there. I was an influencer. And that was when I first became aware that in the States, the bookkeepers are revered as having the primary relationship with the clients, much more so than the accountants. It's partly there's different regime out there. You have to be a CPA to be registered and then regulated as an accountant. The terms are, access to calling yourself an accountant, very different out there. And that's why all the software houses were working with the bookkeepers, because the bookkeepers had the regular contact with the clients. In recent years in the UK, I've actually realized it's becoming more apparent that bookkeepers are promoting their ability to deliver advisory services because they are having regular contact with their clients, whether it's daily, weekly, monthly, or whatever. If they're in touch with the client more frequently than the accountant who's focused on the year-end work, it's the bookkeeper who will have the opportunity as primary driver to promote, pitch, price, and deliver advisory work.
Yeah, so true. And that reminds me, future interview guest that we've got is Joe Wood, who runs the Bookkeepers podcast, which I was on a few weeks ago as a point of recording. And yeah, I remember seeing Joe talk about that at an event where she was saying that, a lot of bookkeepers are starting to realize that they can add value through guidance around like using cash flow forecasting and all these sorts of things. So I think you're spot on. To change gears slightly, one things that we started the episode talking about is that challenge of moving and keeping up with the kind of cutting edge. Lots of things that we've talked about so far are about the importance of keeping on moving, keeping on innovating, working out how are you leveraging technology, how are you handing that work down to your juniors, how are you increasing the value that your more senior members of staff are providing, and moving with all the opportunities that you've got. When you get larger, and so depending on the industry, what that means varies, but in an accounting practice, maybe we're talking getting to 20, 30, 50, 100 team members. It can be quite challenging then to modernize, to implement IT systems and so on. You end up with £2 million change projects because it's hard to move all of that. And I think particularly for professional services business, particularly where you've got a partner model where you haven't got a CEO and a COO and a head of IT and a head of marketing, and instead have got like 4 partners or whatever, I think sometimes they see that very difficult to then make the changes and have that across the whole business and so on. How have you seen that done best?
Well, 2 primary ways, Alexis. The first one is the partners have to agree amongst themselves. And that's often a challenge, particularly if you have multi-generational partners, because they have different timescales for how long the practice needs to continue for them to get out of it what they've invested in, if you like. So there needs to be agreement among the partners. And all too often, I've seen partnerships in name only, where the partners effectively are sharing overheads and sharing staff, but each of them, by and large, run their own practice. And one will introduce software, but the others haven't. And the staff choose who they prefer working for and who makes life easier for them in terms of priorities. So the first thing is getting agreement from the top. And then secondly, bringing the team with you. So rather than imposing on them, I've seen firms where they let the managers or even junior staff go to the big accounting shows like Accountex, Festival of Accounting in Britain, digital accounting shows, Eurocon, or whatever, so that they can get excited by the software and so that they can be driving the move to be more efficient and for their roles to be more fulfilled, because that's much more likely to succeed than imposing it on them where they are reluctant to do it. They perceive their jobs will be at risk. They're scared that their colleagues will lose their jobs even if they keep theirs. They're concerned that they're going to have to learn how to do things a new way, and it might not be in their interest to do it. So making sure that the leaders invite the managers and the staff to suggest, where are the bottlenecks? Where are the challenges? Where are the problems? Do you have ideas about how we could overcome those? Do you want us to go and research it? Do you want to look at ways of doing it? And bringing people with you is much more likely to succeed than imposing it on them. I go back to that example from many years ago, the £2 million change project. They wanted to try and take the partners with them, but it was still being imposed on them. And the more stuck in their ways, that's the best way of putting it, the most politically correct way of doing it, the more stuck in their ways the partners were, the less likely they were to want to join that journey and that transition.
Yeah, indeed. I think one of the other challenges I see is that working out how to allocate time. I think there's one of the concerns with all the technology is, it just takes so much time to even get your head around it. And then you have a look at all these different applications, practice management software, all these sorts of different things. And a lot of them kind of look and feel the same or seem to do the same things. And when you then speak to the people in each of those products, they all seem to just say, oh, yes, we're the best. That's why you should pick us. And it's not clear like who they're the best for. And so I can see a lot of partners struggling with that. And so I like your suggestion of the more you can engage your teams in going and developing an understanding of the industry and getting excited about that. Like I can certainly imagine a partner taking their team to one of these events and saying, look, don't all hang around together, go off, build relationships, have conversations, see things, attend the speaking slots, and then we'll reconvene at lunch, we'll reconvene at dinner and so on, and we'll all go around and share what the most exciting things you've seen. And I think by doing that, as you say, you create a lot more sort of momentum and entropy. Yeah.
So I think you reminded me that something I've always encouraged firms to do is that if they allow staff to go on CPD courses, but when staff go on CPD courses, get them to come back and debrief the rest of the team.
Yeah.
Or, take 2 or 3 lessons, new ideas, inspirations, and share them around and talk about them so that you get a wider benefit of one person attending. But also remember that CPD stands for continuing professional development. It doesn't mean only keeping yourself up to date with technical developments.
True.
Continuing professional development means building on your wider key business skills, but also understanding what software is out there that could make life easier for your office and to deliver valuable services to clients. And that's crucial as well. The other thing I just mentioned here, Alexis, is, and I think it could be a result of the training we have as accountants and bookkeepers, that we want things to be right, and we're always looking to make sure that everything balances. And there's a wonderful expression, perfection is the enemy of action. So everybody wants to know, and I see this in a lot of Facebook groups I belong to, what's the best solution for this? What's the best software? And I always go in and say, well, not always, but I often go in and say, best for who, to do what, for whom? Because what's best for one accountant or one firm with 10 staff and 500 clients who are all in a particular sector, the answers to what's best may well be very different for another practice structured in a different way with different client base. So that's the first thing there. The second one is, rather than going for what's best, identify what your absolute must-haves are as distinct from would-be-nices, and then make a decision, go with something, check with others, is there positive feedback on it? Nothing is perfect for everybody. And unfortunately, hey, do you know, sometimes software is almost as bad as real people. There are mistakes. It's not perfect. None of us are. I don't expect the software to be perfect either. Yeah, we were talking earlier about different podcasting software. We use different ones. My podcast, the Accountant Success Secrets podcast, we use a particular facility. It works well enough for us. The one you use works well enough for you. I don't know which is better. I haven't looked at yours. I don't care. The one we use is good enough for us. And I'd encourage more accountants to recognize that if you've got a choice of 2 or 3 packages, you don't have to spend days putting client data in and checking which is the best for you, because that's not a good use of time.
Yeah. Instead, it's, as you say, getting really clear about what you want, involving the team and making sure that things have been considered and that people are excited about what it'll give them, the benefit, and then making sure you've got that kind of change management, the change of the process, because that's one of the most common things I see. People put in the software, they don't change their ways of working, and as a result, they don't get in the benefits. A little bit like you mentioned with the CRM, where people printing off 12 pages and then annotating them and passing them back. You don't get any efficiency savings versus just having a Rolodex. So yeah, I think that's actually crucial and really good advice. And I think one of the things I'm seeing is that trickiness when you get large as to whether the ownership of IT and how you work, where should that be owned? Should it be owned by one of the partners? Is it across multiple partners? Is it a practice manager? Is it a COO? Is it a head of IT? Is it some kind of operations champion? Like where that sits? Have you seen particular examples where that seems to work best?
As we know, I trained as an accountant, so you will get the inevitable accountant's response. It depends.
Yeah.
Yeah, I can think back to my days in practice when the various board level responsibilities would be shared amongst partners. And invariably, the one who's absent from the meeting where the roles are being considered used to get staff or human resources. And the one before that was in those days never very popular was marketing, and IT was often the office manager. Mm-hmm. There are so many factors to consider, including enthusiasm and ability and interest, that it will vary. The most important thing, it seems to me, is recognizing that billable hours is not the only criteria for determining value within an accountancy firm. Again, I remember I was a partner in a very large firm, and the director of marketing was not an accountancy trained partner. It was the first time I'd worked anywhere where sort of the management team included people who had real expertise but hadn't trained as accountants. Mm-hmm. Now, that is much more common than it used to be, much more common. Thank goodness. The world has evolved. Yeah, I've only ever worked in one firm that had a director of knowledge management. Again, much more popular now than it was, but I'll bet every director of knowledge management has different roles and responsibilities compared to others. And I think it was on an earlier edition of your podcast, you had an interviewee who talked about the fact that she'd just engaged her first COO and realized that every COO has different job to do because it relates to bringing the owner or the chief exec's vision to life, and the visions will all be different. So I think the answer to your question, and frankly, it's an approach that I regularly encourage in accountancy firms, is to think about all of the things that need to be done and then to decide who might be best placed to do them, making sure nothing gets dropped off the list, rather than getting caught up in a title.
Nice.
And assuming everybody's different assumptions that they will do everything that somebody with that title needs to do. Fantastic. It shouldn't be like that. It doesn't make sense. to
Yeah.
me.
No, love that. I think that's really, really great advice. Well, fantastic. Well, thank you so much, Mark. There's so much more I could be asking you about, but where are the best places that people learn from you? Because I'll make sure in the show notes we link to your website, which is bookmarklee.co.uk. I'll link to your LinkedIn and your Facebook and also YouTube channel,
Yep.
which is also Bookmark Lee. Any other particular
Yeah.
resources that you'd recommend that people go and seek out?
Yeah. On my website, there's a free downloadable 6-time management secrets, which
Nice.
seems relevant to what we're talking about here today. Online everywhere, as you say, I'm Bookmark Lee, so my business card is a bookmark as well. Anybody ever meets me, always ask for one. And please, if you listened, if you've listened or watched this podcast and it's been of use or value to you, do let me know, please. I would love to know. There's a page on my website for podcasts, all the interviews I've done. I can count on the fingers of one hand people outside my family and friends who've told me they've ever listened. So it would be nice to know that there is a real audience out there. And I just want to be of use and value where I can be. And speaking, page on my website for the speaking, the sort of major talks I do that are of particular interest. And also I run the Soul Practice Club, an online group for sole practitioners who want to get together, an informal camaraderie type approach, learning from each other and from their mistakes and my insights and advice as well. We meet once a month on a Tuesday morning.
Marvelous. Love that. Well, fantastic. Highly recommend people go check that out. If you're in the accounting and bookkeeping industry, do that. But I'm sure, and I'll echo Mark's request, like if you found this episode useful, please share it on social media, tag us in, just let us know that it's been useful to you, perhaps a key takeaway, or even just a listen to this. There are other people listening, because I've definitely had that experience, Mark, where I'll be at an event and someone will go, "Oh, I really like your podcast," or whatever, and I'm thinking, I've never seen that person post about it on social media or like a review or anything, and it's lovely to have that direct feedback, but I know that there's many more doing it. So don't just be a statistic or a number in my analytics. Please do post on social media, say hello, tag us in, tag Mark in. We'd really, really appreciate it. And if you'd like to support this podcast, well, the best things that you can do is leave a 5-star review wherever you get your podcasts. We read them all and we really appreciate it. So please do that. But otherwise, until next time, have fun.
Bye.